Hey everyone, let's talk about something we all love but rarely understand: getting a big chunk of money back from the IRS. If you're paying for a nanny, a sitter, or even summer camp, you've probably heard of the Child and Dependent Care Tax Credit. But for most parents, it sounds like just another boring tax form, especially Form 2441. Today, I'm going to break this down. I'm going to show you how this one credit can put up to $2,100 back into your pocket, why you might be leaving money on the table if you're using the FSA, and exactly how to handle the conversation with your nanny so that everyone is protected. This isn't about being a tax pro. It's about making sure that you get paid back for the high cost of raising a family. Okay, first things first. Exactly what is a child and dependent care tax credit? So basically, the government realizes that childcare is insanely expensive. They know that if you cannot afford childcare, you can't go to work. So they basically offer you a credit to help cover those costs. Now, a lot of people get credit and deduction all mixed up. A deduction just lowers the amount of income you're taxed on. But a credit is way better. A credit is a dollar for dollar reduction of the actual taxes you owe. If you owe $5,000 in taxes and you have $2,000 credit, you now only owe about $3,000. It is literally like a gift card for your tax bill. In 2026, the rules are pretty straightforward. You can claim a percentage of what you pay your nanny up to a certain limit. For one child, the limit is $3,000. For two or more kids, it's $6,000. We're going to do the math on that in a second. But for now, just keep those two numbers, $3,000 and $6,000, in your mind. Now, before we get into the money, we need to talk about the golden rule of this credit. To claim it, the childcare has to be work related. This means you and your spouse, if married, have to be working or actively looking for work while the nanny is caring for your kids. You cannot claim this credit for a Saturday night babysitter while you go out for dinner and a movie. The IRS says the care has to be necessary so that you can go earn a living. Also, this is the part where most people get a little nervous. To get this credit, you have to play by the rules. You need your nanny's social security number or their tax ID. You cannot claim this credit if you're paying your nanny under the table. Think of it this way: the IRS is not going to give you a $2,000 thank you credit for expenses that they have no records of. So, being legal is the only entry fee to get this money back. Let's look at the actual cash. The IRS gives you a credit for anywhere between 20% to 35% of your expenses. Most professional families fall into that 20% bracket because of their income level. If you have two kids and you spend about, let's say, $20,000 a year on your nanny, the IRS lets you count $6,000 of that. If your credit rate is 20%, you get $1,200 back. If you qualify for a higher 35% rate, because your income is lower, you get up to $2,100 back. Now, I know what you're thinking. $1,200 is great, but I spent $20,000. I hear you. But remember, this credit is usually on top of other benefits, and it's a way to almost completely offset the employer taxes that you have to pay for having a nanny. When you do the math, paying legally and taking the credit often costs almost the same as paying under the table, but of course with zero of the legal stress. You're essentially getting the IRS to subsidize your nanny's Social Security and Medicare. Now, here's a mistake I see all the time. Many of you have a dependent care FSA through your job, where you get to put away $5,000 pre-tax. These are awesome, but you can double dip. If you use $5,000 from your FSA to pay your nanny, you've already used up most of your allowed expenses in the eyes of the IRS. If you have one child, the limit is $3,000. Since you've already used up $5,000 in your FSA, you get zero extra from the child care tax credit. However, if you have two or more kids, your limit is $6,000. If you use $5,000 in your FSA, you still have $1,000 left over that you can apply to the tax credit. That's an extra $200 back into your pocket just for filling out the Form 2441. It's like finding an extra $20 bill, but this one just has an extra zero attached to it. When it's time to actually file, you're going to look for the IRS Form 2441. Don't let the name scare you. It's basically just a who, where, and how much form. You'll put your nanny's name, their address, and their SSN. Then you'll list the total amount you paid them for the year. Your tax software or a CPA will do the heavy lifting from there. The most important thing to do right now is to make sure that you're keeping track of those payments. Whether you're using a payroll service or you're doing it yourself, you need a clear record. If you're audited, the IRS just wants to know that the money actually went from your bank account to a real person who is caring for your kids. Now, let's talk about what can feel like heavy lifting. But the child and dependent care tax credit is one of the few times the tax code actually works in the parent's favor. It's there, so make sure you use it. If this made your life a little easier, hit that like button and subscribe. I'll see you in the next video. Bye, guys.